everyone. So I am Dannie, and I am the founder of Pennies to Wealth. I'm going to give you a brief bio and then we're going to roll right into it. So I will be asking questions throughout the presentation, so don't be shy. Please speak up. Let me know what's on your mind and how you're viewing the things that I'm sharing, and we're going to have a great time. So let me go ahead. Okay. So, of course, if this is a money presentation, I'm going to try and make it as lively and exciting as possible. And so, try and break away from the boringness of what personal finance is to set you up on the path to success. So, like I mentioned, I'm the founder of Pennies to Wealth, and I just provide relatable and digestible financial content across multiple platforms. So I have a blog, an Instagram, as well as trying to do a little TikTok. It takes a lot of energy, but that is me. So today's presentation, we're going to look at my story, where you should begin, and then we're going to dive into budgeting and banking, debt, credit, saving and investing and planning for college. And of course, all of this information, of course, can stretch over multiple hours, but I'm going to try and hit the major topics in each of these categories for you. So how did it start? I was raised by a single mom, a whole tribe of beautiful women, and I knew that money was an issue, but I didn't understand the how and why. I began working at 15. I had to get a permit to do that. My grandma helped me get a job at a florist. And so now I have a shady relationship with flowers after that job. But I began working at 15. My mom took me to go and open my first bank account. And I kept that bank account for about 10 or 15 years. So I'm thankful for her doing that. I even used it in college. So speaking of college, I graduated about a year and a half early with around $10,000 in debt. And the graduated early part was due to taking dual enrollment courses as well as AP courses. So I came in with a lot of credits. Once I did graduate college, I struggled to find a job. It was like during one of the great recessions and of 2010-ish. 11. And so through that, my debt increased, and then I got married and he brought in a lot of debt. And then we just made stupid choices. And so over time, that increased all the way up to $130,000. And so you'll see here on the right hand of your screen, hopefully it's on the right hand of your screen, my financial timeline. I was broke most of the time. And then I was broke with a job. And that was just working random jobs that I could get. Most of it wasn't salaried or anything like that. And I didn't have any room for saving or being in debt. Then around 26, 28, I was not broke. So I was like, okay, maybe I could make something happen. I was finally able to get a job. I had to drive 2.5 hours each way to get that job, but I made that sacrifice because I hated debt more than I hated being in my car all day. And so started paying that off. And surprisingly, we were able to knock out that $130,000 in debt in that 2-year time. And then I saved up a little cash. And so now I'm in this stage, financially stable. I'm single now. And money also helps you with navigating the world as just a single, gorgeous Black woman. And I'm going to show you how important that is. But these are just some of the things that comes with financial stability. And hopefully I can encourage you to pursue the same so you don't have to experience all of this little brokenness. So what is that $130,000 in debt? I wish that it was clothes and shoes. It was not. It was a car loan. It was an RV loan. Why did I have an RV? Because my bright idea at the beginning of my debt payoff journey was to sell everything in our rental and move into that RV. But then, as you can see, it was a little dumb because I got $50,000 in debt from that. Um, Credit cards, about $22,000. So what we did, we paid off 10. And then once we moved into the RV, and then moved out of it, we racked up $10,000 more. And that's just a cycle of debt. If you never save up any money, you're just going to keep falling in and out of debt like that. And then jointly, we had $43,000 in student loans. And so I can't see the chat, but we're going to have pauses so I can go and check it just in case. So the deets. This is showing you the comparison between Black men and Black women. So historically, African Americans in general have a significant lower level of financial literacy than the rest of the population. But when you dive into just males versus females in the African American community, males usually get more financial literacy and education than women. Why is that an issue? It's a big issue. One, Black women get paid significantly less than white women and other women of color in our range. I think the only one who doesn't get paid as much as us is Hispanic women. And we won't reach pay equality until 2119. 2119, like it's insane. White women will get there 2055, still super in the future, but you can see the difference there. The long-term cost of this gender pay disparity adds up to be almost $1 million of lost earnings. And I don't know about you, but I want all of my coins, so this makes me mad. And so when I talk about financial literacy, you'll see that we're giving young men the opportunity. Of course, it's way less than anyone should have, but over 4 million households depend on a Black woman's salary to survive. So providing us with that financial education and that foundation can change lives. So before we roll into the financial content, I just wanted to share how to go from a poverty mindset to an abundance mindset. And that's first releasing the blame, the shame, and the past. I had to do that multiple times. And sometimes I look at myself and I'm still holding on to that. A lot of people think in order to be financially fit, like you have to have all the coins, all of the resources. But first it starts in your mind, especially if you are first generation in your family, or you've dealt with trauma, or just like the systemic barriers placed on us as people of color. And so releasing that, not accepting it, not being, okay with the world, but just releasing that burden from yourself. Then second, recognize that your intention to do better is courageous and commendable. I had to give myself some slack. I had a lot of debt. It was sad. I have you could say it could be a sad story. But then I had to recognize every little penny that I throw to debt or to my savings or just to my self-development is important and it matters. And understand that you're going to make mistakes over the way. So I always show my timeline to show you like, hey, I kept doing dumb things after I even realized I needed to get my money in order. So I just want you to understand you will make mistakes. Even last month, I feel like I'm a budgeting queen guru. I sent money over to savings, but then I forgot to pay my rent. It was like 3 days late and it was just that random thing. And so I had the money, I just was not paying for it. And then remember to never, ever give up. Every time I would hit one of my financial goals, something else in my life would happen. Like I mentioned, I was married. Now I'm no longer married. It sucked. I had to start over. But, that's a part of the journey, and just continuing to move forward is important. And then third, enjoy the journey and listen to your body to avoid burnout. You cannot throw all your money to goals and other people and other things and expect your body to just be okay with you sacrificing yourself. Like you have to find some balance in that. And so I wanted to touch on it just very quickly. Okay, my cute little emojis. How would you all rate your financial knowledge? And so you can put in the chat, you can put a 1, a 2, or a 3. And no shame up in here. So I'm gonna pop up the chat and see what people are throwing in. Not the summer got you acting like a 1, doesn't it? You're not the only one, hun. And that is fine. So I see some 1s in here, and that's okay. That's why we're here today. So thank you all for sharing. Okay, so let's see what we can do about that. So first step, managing your money as a young adult starts with budgeting and goal setting. And I know you're like, girl, I don't even have a job. Like, but these skills will apply to your life when that time comes. Even if I got $20 from somebody, my family knew okay, Danny's gonna hold on to about $15 of that forever. Even as a toddler, that's how tight I was with money. So at least when I got some money, I was able to do a few things. And so my friend in the chat, she's like, summer got her acting brand new. And I'm sure this meme relates to that. You're explaining to yourself why you deserve something. And I mentioned, you can budget for eating out. I go on dates with myself every week now, but it took a while for me to get there. But yeah, my budget gives me the side eye, I swear, every other month. Lots of text on the page. I'm sorry. But so your budget is just basically your roadmap for success. You establish your priorities, plan in advance to budget. And just remember, it's not a bad word. It's a plan for your money. Millionaires have budgets, and it's okay. A budget is your best friend. So it just gives you an idea of how much money you have to achieve your goals and set yourself on the right path. I even had a budget in college, and it was great. Even with my little financial aid, I was able to at least live and eat. Some of my friends did not. And so by the time October, November got there, they were struggling. And so just keep all of that in mind. It doesn't have to be just general income. And so with zero-based budgeting, I always recommend it. It's just ensuring that you're accounting for every dollar that you bring in. And so each dollar has a purpose, and that allows you to stay on track. So what are some of the categories? Of course, as you get older, you added more categories. I'm going to show you a more young adult budget in a second. But of course, it's going to include your income, your fixed expenses, which is just basically your bills, rent, subscriptions, if you have a car or whatever. If you get a bill, that goes in there. Variable expenses, food, gas, fun. Lots of people spend money on food. I'm so thankful DoorDash or anything didn't exist when I was a teenager, but yeah. And of course, savings and investing, and debt payments if you have those. Okay. So budgeting basics. You can do a budget in so many different ways. You can use pen and paper, a spreadsheet. I have a free spreadsheet on my website, or a mobile app if you want to. And then just make sure that you're reviewing your budget at the end of each month to assess what your actual spending was and how you did and all of that. And so I have a budget party. I get my favorite drink and my snacks, and I sit down with some good music. Right now I'm listening to Giveon every time, so I'm in a mood as well as budgeting. But whatever it does to help encourage you, work it out. So so I didn't really have a written budget when I was in high school. My mom was really nice, and she's like, okay, just put gas in your car and feed yourself. And if you want to go hang out, you're going to have to pay for that too. But I just wanted to show you a difference. So I'm more like Selena when I was in high school. So here you'll see here, they just put down what they owe and what their plans is for their money. You'll see here that Michael has everything accounted for in his budget. But Selena, she's spending about $30 over. And so if you ever find yourself doing that, whenever that time comes, just always remember to decrease that fun stuff first, or you can increase your income and decreasing those like unnecessary expenses as well. And so if your income is greater than your expenses, then you can increase your savings contributions or decrease any of your like debt or who you owe. And so I'm sure most of you are familiar with the SMART goals being specific, measurable, attainable, relevant, time bound, and we have all of the descriptions over there. So just thinking about who, what, where, why, and this goes for any age. I know I had goals. I was paying for prom dresses. I went to too many proms, so I think by like my junior year in high school, my grandma was like, girl, you're gonna have to pay for your own prom dresses. So I had to figure that out. And so it doesn't have to be something major. I want you to remember that getting this education at any age is super important. I did a conference with some super young girls in the Girl Scouts, and I had a 6-year-old coming up to me asking me how to budget her $5 a week allowance. And so all of this applies to life, no matter your age. And so here's an example. I want to save $300. That's very specific for dance fees by August 1st. We have that measurable part. And I will do this by transferring $30 every 2 weeks to my savings account starting on X date. And so that's how you set your goals, and it just allows you to be able to hit them in a better way. So speaking of goals, what are some of your financial goals that you may have? Drop it in the chat. Buying a car, saving for college, buying a certain item, paying for XYZ. It is warming up, so I know you want to buy some things. Saving for college, being debt-free, saving for an apartment, yes. Save for a trip, college. Yes, textbooks are crazy. It's so crazy. And so I would recommend for textbooks, make sure you get some nice, gently used textbooks if you can. Ask your friends, like, hey, did you take this course? I'll take you to lunch if you let me hold your book. Because save all the coins when it comes to textbooks. Purchasing a vehicle for business, an apartment, yes. Saving for a car. These are great goals. So thank y'all for sharing that. So let's talk about where to put this money. So, of course, you have money. You need a place to stash your coins. Hopefully one of my clients is not on this call, because last week I was talking to her and she's like, yeah, I have $5,000 in a shoebox under my bed. And I'm like, girl, no, it's 2021. You cannot be doing that. It's dangerous. She has kids and dogs running around. Your money can just be going up in flames or something. And so make sure that you have a place to stash your coins. And so some options, I know this is geared towards, this age range. So that's what I'm talking about specifically. But so for teens and students, there's a few options. So Wells Fargo, that was actually the bank that I started with, and I'm using these two because I know that they're all over the country. And so with Wells Fargo, it just requires like a $25 initial deposit, no maintenance fees. Capital One also has one, and most of these If it is a teen account, then as you become over 18, it'll transfer over to a student or a young adult account. But make sure that you're checking out your local credit unions because they offer some great options with limited fees, and sometimes they'll even give you money to open up account with them. And so check all the things. 2 accounts you should have: checking allows you to pay your bills, buy your goods and services with the money you have deposited. Savings, a safe place to put your money aside for a future goal or for unexpected expenses. I like to have a savings not attached to my savings account because what you'll notice is that you'll just keep transferring the money from your savings into your account. And so I have those two separate just to preserve my funds. And then down here, you'll see a high yield savings. So you have to make sure that they're paying you a fair amount. Most of the time, if you get an online bank, they'll offer a higher interest rate as compared to Wells Fargo or someone like that. So either some of you eventually want to work, I saw some you have businesses. Just wanted to introduce you to a pay stub if you've never seen one. Sometimes it can get a little confusing. First, how much did they pay me? That's the most important part. And then you'll go down here and you'll see a breakdown of your hours and your rates. And then you'll see Medicare, Social Security. Unfortunately, we cannot do anything about that, honey, as well as this income tax. So I was just showing you, just to show you, I don't have any tips other than once you start to get older, you can begin investing. And I'm going to show you that a little later, and that can help you with the taxes and all of that stuff. So how many of you have a checking or a savings account? Yes, we have some account owners in the chat. And if you don't, it's fine. You can get one. Ask those parents, like, hey, get me an account. And we're going to talk about something that I really want you, if you are underage, to see if your parents can do for you to help you build your credit. So this section, all about credit. This is when things can go left with your finances. I'm sure all of you have heard like, oh, I got bad credit. I got no credit. I got some confused credit. This is where, we're budgeting and we're doing things, but this can affect your life in so many different ways. So let's roll up into this section. Lots of text. I'm sorry. I'm trying to put everything on here at once. So when people say credit, they're usually talking about their credit score, but credit is actually when a bank or a business allows you to purchase your goods on the promise of future payments. So that can be credit cards, loans, etc. And loans can be personal loans or student loans or house loans or whatever. That's credit. Then you have your credit history, and that's just like your written record of your use of credit. And then you have your credit report, which is generated from a credit agency, and that just lists everything. So all of the information regarding your credit history, as well as your current credit standing. And so a lot of information, but I'm going to show you an example. And then 2, when you're thinking about credit, so the good thing with saving and investing, you're going to generate a positive interest. But when you are dealing with debt, you're going to owe somebody interest, and that stuff adds up super fast. And so there's 2 different ones: annual percentage rate, which you may see as APR if you start diving into that, and then you have APY, and I have the differences on the screen. Basically, it's just like the cost over a yearly amount, as well as the interest that you'll see on your account every month. So how to build credit score as a teen or young person? First, get added as an authorized user on an adult's card. So if you know someone who, I wouldn't say just walk up to people asking them if they got good credit, But if they're like your mom or dad, like, hey, how do you feel about adding me as an authorized user? My mother did that for me. I'm thankful. Um, and so I was already starting to generate a little bit of credit history. Then, once you turn 18, or if you're already over 18, you can get a secured card. And the good thing about a secured card is that it's secured. So, what's secured about it? You put money on it, sort of like those little cards that you see in the grocery store. I've lost what they're actually called. My bad. But you say you have $100, you put it on this card, and then you only have $100 to spend. And so it just works basically like a debit card, but it reports to those credit agencies, which impact your credit score. And then you can get a student credit card, which is targeted towards students, but it has a certain limit. And so it's no longer secured. I like to go in this flow first, get a hang of it as an authorized user, then get a secured card, so you can start building that habit. And then you can transition over to a traditional credit card. So make sure you look out for some few things: annual fees, minimum requirements. All the time, they're going to have some minimum requirements, whether it's like age requirements, payback requirements, what have you, but make sure you're checking that stuff. And then your interest rate. But the way I encourage everyone in my life to use credit cards, whatever you charge on a card, if you don't have it in the bank, don't charge it. You need to be able to use credit cards like it's cash, because if you stop doing that, you can be in a lot of trouble. So I know I mentioned credit scores, and that's just that 3-digit number that represents your credit worthiness. And I'm going to show you in a second how many people check that. But this is just a range. You can go from as low as 300 or 0, like it just won't exist, to excellent. I was talking to my mom the other day, and she's like, you can do whatever you want. You have an 8,000 credit score. I'm like, Mom, they don't have an 8,000 credit score. But what she meant is like, you got really good credit. The sky is the limit. And so what goes into your credit scores? So a few things: payment history. So it's just like, did you pay your bill? That's about 35%. Then how much are you actually using of your credit? So like I mentioned, the whole $100 thing. So if you have a $100 limit and you're using up to $100 of that limit, this is going to negatively impact you. And so I always recommend that people use 30% or less. So in that example, with that $100, trying to use $25 at a time until you can increase your balance will help you with your credit score. Then new credit. Some people are addicted to opening up credit cards and just seeing if they can get approved. Please don't do that, because it affects your score. Just take it one day at a time. And then length of history. So I got my actual first personal credit card when I was working at Macy's. I was a sales associate, and they gave us store cards. And so that's the oldest card on my history. And I try and keep it open. It's about 12 years old. So I try and keep that open, just because how old your cards are adds up into your overall score. And then a credit mix. I wouldn't worry too much about this, because as you age and as you go through life, you'll have a credit mix. Sometimes you have credit cards or student loans or a car loan or a mortgage. And so trying to seek that out would just be too difficult. And this is an example of a credit report. I always tell, no matter how old you are, check your credit report, because people are thieving out here, and you never know what could be in your name. One of my coworkers, she found out someone had opened like 3 cards in her name, and I just want you to make sure that you're checking it out. But like I said, it has your personal information, employers, if you may have worked before, and then negative items are usually at the top, and they'll give you a breakdown of that. And then you'll have like the history of your actual accounts that's open, and then if anyone else has requested that history. And so that leads me into this next slide. What can a good credit history, aka a good score, actually help you with, it's securing lower interest rates. You save money if you have the higher your credit score, the more money you save. And then you gain easy approval to rent an apartment. I know a lot of you want to rent an apartment. You mentioned that. And so trying to find ways to up your easy approval is very important in that process. And then once you start being in charge of like your car insurance, that also plays a part, as well as phones. So if you want to go into T-Mobile or Verizon, they're gonna probably tap your credit to see if you're worthy of getting that new iPhone or not. Getting hired for jobs in certain industries. I work in the finance industry as well as run this company, and so they check your credit history. Military and government, they also check it, as well as your bills. I had to, I'm moving. I contacted the electric company. They had the nerve to check my credit history. And so all of these things are important. They don't tell us that until it's usually too late. So here you go. Dannie has told you, use it at your will. And then overall, just better money habits can heal your relationships, as well as being able to refinance. And I know some of you may not know what refinance is. And that's just if you had a higher interest rate, say you go to college and you have a 12% student loan, then as you improve your credit history, maybe you can reduce it down to a lower amount to overall save you more money. So I see the chat. So how do you get added as an authorized user? Great question. So if your mom, or I think you can also do like an auntie or someone like that. I wouldn't have like a complete stranger do it because that can cause other problems. But if they have an existing credit card, then they can just add you as an authorized user and get you a credit card to use under their account. And so however their credit is, you start getting that on your own. So how do you get credit? So I would first start with getting added as an authorized user, like I had mentioned, as well as getting a secured card once you are 18. Most banks offer it. Just roll up in there and say, hey, I would like to do X, Y, and Z. Why is it so important to have a credit card? It's just one of the easiest ways to build credit. And if you use it correctly, then you will never be in debt. Where should you check your credit at? So where should you check your credit at? We have these options here. Most people use Credit Karma. You can also go to annualcreditreport.com or Credit Sesame. And if you already have a checking account, they'll also give you your credit scoring app as well. So I know Wells Fargo gives me mine, as well as some other banks. But Credit Karma is super easy to like sign up for. As long as you're putting money into a secure card and having it automatically pay off at the end of the month, they won't charge you any interest. And so that's the power of credit cards. As long as you're not carrying a balance, you will never pay that interest. I currently spend all of my bills on credit cards. I have my debit cards locked up. I haven't seen cash in probably like 4 or 5 years, and I don't use checking at all. And that's just because now I know how to manage cards. But yeah, so as long as you pay off your balance in full, they will never charge you interest, which is a great aspect of managing your credit. Thank y'all. So we can save some more for the Q&A. Let's roll into the last 2 sections. So saving and investing, my favorite part. That's why my company's name is Pennies to Wealth, because I was like, hey, I got pennies right now, but I want some wealth. I am tired already. So let me show you how to build some wealth. So bad news, 45% of Americans have $0 in savings. And that is just the fact. And over 70% of Americans couldn't cover a $300 to $500 emergency. And that's even worse. So once you spend less than you make, that magical remainder of money can be used to tackle your goals and invest for your future. What I want to put out here today is that we all start in various situations. I grew up with people who inherited tens of thousands of dollars as soon as they got 18. I didn't have that luxury. It's no one's fault. It's just we all start off different. And so trying to compare yourself will keep you from building wealth according to your timeline. And so I always show like my first budget that I did as a married person, because I just lost my mind, I guess, after I got married, and I didn't make a budget until 3.5 years later. But you see here, I only had $100 after paying for my bills, and I lived like that for a long time. And so when people see me saying that I paid off over $130,000 in debt, they think that somehow I was rich and I had all this money. I did not. Most of the time I had $128 left over to throw to my debt or to my savings. And so you can just imagine if I kept it like that, I would have still been paying off that debt today. And so that just came from increasing income. Like I said, I moved into an RV. I I got the RV debt, but I was able to achieve a lot of goals while being in there. And so it's just making these sacrifices to build up one step at a time. So always remember that. So a lot of my friends in the chat, you want to save for something. The best way is to do it in this order. You set your goal. So I have some clients, they are actually moving out for the first time. And it's like, okay, how much do you need for that? What are all the different costs? Write it down. And so, of course, it says vacay. It can be anything. And so then you set the time frame to save it. Well, I want it by this month. Okay, how many months is that? It's 6 months. Great. Then we're going to do some math. Luckily, our high school education comes into use finally. You take that amount, divide it by the time frame, and then it gives you how much you should save. That's how I do everything in my life. It's not in the budget. Okay, if it's not in the budget, I'm going to break it down and save a little bit at a time so I can get there. And so that's just how I encourage everyone to save money. Super easy. And no matter the amount, you can achieve your goal by breaking it down this way. So why do people invest? They invest to save for retirement, to beat inflation. Inflation is just the increased cost of goods over time. I used to could get 2 apple pies at McDonald's for 99 cents, and now these people are charging me $2.60. So that's inflation, a real life example. Building wealth, and this just sets you up for living a more comfortable life. So the different types of investment accounts, you'll have 401k, and that comes from employers. You may hear that a lot. And sometimes they'll offer you a match, which is free money to incentivize you to save. If you don't have a job or you don't have a 401k account, then usually people encourage you to invest in an IRA, and you have to be over 18 with a caveat for that, which I'll show you in a second. But this is what I would always suggest people open up first, and you can do that at multiple places, which we'll touch on in a second. And then we have taxable brokerages account. A lot of people don't teach our community about these various accounts because they want to keep us where they think we're going to stay. But the great thing about a taxable brokerage account is that there's no limits on how much you can invest, but there are withdrawal taxes and things of that nature. That's a whole nother presentation, but I did want to touch on these 3 important accounts. So how do you invest? One, you need money, but then there's different options. So you can just buy a stock in your company, and all that means is that you own a piece of them. It's called a share. And so if you like Apple, then you're like, I want to buy 1 share. There you go. You're already an investor. Then there are things called mutual funds. Old stuffy men have tried to own this sector of investing. This is actually the sexiest part of investing. And what the good thing about mutual funds is that it combines the money from multiple investors. So if all of us on the call were like, hey, if we own mutual funds, of course, but it just reduces the amount that you need to buy certain investments. And so it's like a basket of funds. And so that's all mutual funds are, a basket. And so with individual stocks, you say, hey, I want to buy one company, I want to buy this company. With mutual funds, you can say, hey, I want to buy a whole basket of companies for one low price. And I always recommend that route. Then you have bonds. Some of you may have saving bonds, maybe some of you don't, but this is just loans to corporations or the government for a set period of time. Lots of text, I'm sorry. So an index fund is a type of mutual fund. And if you start following me on Instagram, you'll see that I am an index fund investor. One, I don't have time to be picking individual stocks, and it's a little more risky to put all of your money in one company. It's better to diversify, and diversify is just mean get a whole lot of companies in one. And so I love index funds. It's super easy to set up. Anyone can set up and buy an index fund, and this is the very popular one here. As you can see, the top 10 stocks inside of it. So just think of an index fund as a container, and then they have tons of stocks inside. So this one has Apple, it has Microsoft, Amazon, Google, Facebook, Tesla, Johnson & Johnson, Berkshire Hathaway, and that's a very big corporation, JP Morgan Chase, and Visa. And so then now you're an investor in all of these things instead of having to scrape coins together to buy one company at a time. And so the primary reason, like I mentioned, for young and beginning investors, it's simple. It requires very little research. VTX has over 1,000 individual stocks in it. This is just the top 10. So it can hold up to hundreds or thousands. And once you invest the minimum, you can invest as little or as much as you want. So that's a crash course in investing. Of course, it would be a completely separate course, but I want to keep it going. So some of you have jobs, and what that means is you can open a Roth IRA. If you have a family member who has a business and you help them out, you can also open up a Roth IRA before the age of 18. So anyone with earned income, no matter your age, can open up one. And the good thing about a Roth is that once you put money in, it grows tax-free. And so I encourage you guys, once you leave here today, to research Roth IRAs to set you up on the path to success. And the good thing here, if you made $2,000 babysitting, you don't actually have to take that $2,000 from babysitting. If you know someone, or if you're about to graduate, you can lump up all of that graduation money and put it in there. But as long as you have actual income, then you can get around that. Let's see. Okay, so how to invest? Super easy. You open an account. These are the most popular ones. I'm a Vanguard person, but the interface is a little boring. So if you wanted to research some more, I know people are like, okay, what about Robinhood? Robinhood is an interesting app. If you want to be a long-term investor, I would look at these three. But if you want to put your feet in the water, I wouldn't put all my money in Robinhood. But if you want to put like $10 to $15 a month or something over there, then you can do it. But if you want to actually have these accounts for the long run, check out these accounts. Then you just transfer your money. It's as simple as that. And then you buy investments. So why are we talking about this? The earlier you start investing, the less you'll have to contribute. So you'll see here, somebody at 18, in order to get $1 million by retirement age, they only have to invest $76 a month. That's it. Then it starts increasing as you get older. The longer you wait, the more money you have to put into an account for it to grow, because that's that beauty of compound interest. I know that all of us have learned that in school. When stuff starts to compound, it adds on to itself over and over and over again. And that's why people encourage investing, as in compared to putting your money under your bed in a shoebox, like one of my dear friends. It just grows. And this is an example of that. So you'll see here, if I just put my money in a savings account in 40 years, I'm only going to have $100,000. That's a lot of money, but I would rather have $1.5 million. And that's because when you invest, you get a higher return, and that money starts compounding and growing super, super fast. And then over here, it's just an overview of what my investing journey has been. You see, I just started. And since I just started, even if I stop, I'll still have $1.6 million at retirement. And if I keep investing at the rate that I'm doing, I'll have $12 million. I'm going to have a lot of money, but that's just because I save and invest. And I try and do that every month now. But the first start is budgeting. Second start is getting rid of your debt. And then you can get to this point. So I'm going to save this question for the Q&A, but make sure that you're thinking of it. I wanted to touch on college before we wrap up today. So planning for college. So secure your degree with little to no debt. And I know you're like, girl. So I just celebrated my 10-year college anniversary last week, I believe. And this is how I was able to minimize my amount of debt. College selection is important. Follow the money and not the name. I'm from North Carolina originally. I had an option of either going to Duke or going to my state school, NC State. I decided NC State over Duke. One, because Duke is super expensive. I would have been spending like $50,000 a year just on tuition alone, not even housing. And so I followed the money and not the name. And as you get older, you realize nobody cares where you went to school. Like, no one asks you that in adult life. No one cares. So definitely assess that. Always complete your FAFSA. Always seek out every single financial grant and scholarship. Harass your college counselor if you have one at your high school. Seek out all of the free resources online. And I put the link down here, studentaid.gov. And then remember that student loans are your last resort. Only borrow what you need, and don't take out more than what the career you're trying to go into pays an annual salary. So I know, for example, if the job that you want is super fulfilling and it makes you probably $50,000 a year, don't take out $200,000 for that degree, because it's going to be a burden on you to repay that. So keep your loan and your salary information in mind. And once you get to college, you'll get a refund, which means after all of your actual expenses are paid, sometimes you'll get a refund. Remember, that's not play money. That's for you to actually live and eat, not for you to go clubbing every day. So just put it away and budget it out for the semester to keep you on track. And then network and do internships to prepare for your career. I wish I would have done more. I'm super introverted and shy. I just did not feel like dealing with people, but I wish I did, because maybe once I graduated, I would have started accumulating a better salary at that time. And so I mentioned FAFSA. This is just what that cycle looks like. It's on that website that I had mentioned as well. You can start saving. I know a lot of you are. Look for scholarships, all of your local community organizations. Sometimes they'll give you money, even if you're not participating. So ask everyone. That's what I did. Applying for scholarships was my full-time job. And then, of course, state aid. A lot of this information is with your guidance counselor or your financial aid office at the college you're interested in. And then applying for FAFSA, of course, and FAFSA is just the free application for federal student aid. And just remember that aid, grants, and scholarships never have to be paid back. And so that's why I always encourage that. And this just gives you the details. And of course, it's on that studentaid.gov website. And so grants, free money, loans, not free money. And it comes with interest. Work study is great. I had a lot of friends do that, and it just gives you a job on the campus that you're going to school with. And so it'll help you pay your educational expenses like books and also give you some job experience as well. Alrighty, and so the last thing, so once you're starting to think of college, and just remember, not everyone has to go to college. A lot of high-paying careers nowadays, you just need to get a certification and you can hit the ground running. One of my friends is a mortgage lender. He makes $200,000-$300,000 a year. Never went to school, never went to college day in his life, and he makes way more than me and a lot of my college-educated friends. So just do your research. But cost of college, housing, transportation, food, fun, books. Remember fun, personal expenses, as well as your technology. And so consider that when you're looking at multiple places to go. And so that is the end of that long presentation. I know it felt like a train wreck, but I definitely encourage you to go on my website. I have all of this broken down step-by-step, investing and budgeting, all for free. And of course, that free resource library. And I love to end with this. You know, I didn't see anyone budgeting, saving, or investing growing up, but that didn't mean that I was destined for a life of financial instability, although I kept telling myself that. So break free of that narrative and just learn to acknowledge and appreciate your past without being chained to it. So that is the conclusion. And I know we're gonna have some questions. So let's get with that. Yay, I see some NC in the chat. Oh, I got some future stock buyers. Definitely follow me. If you want like more like daily tips, encourage that. But let's get into the Q&A. I can see what's going on. Okay. I'm so glad you all learned some things. And so in the Q&A, how do you get a savings account? Does it have interest? Yes. So if you're over 18, I would recommend that you look at Marcus. It's by Goldman Sachs. It's online and it's just a simple application. Usually they have the highest interest rate, as well as Ally Bank. They have a high online interest rate as well. Start with those two and you should be good. But if you are under 18, you'll have to probably get it at your local bank, or have a parent open it up for you. So you just have a few of those. So with your student credit card, I would just start using it. Like I said how I use my card, like I just pay it off every month, build up that relationship with that bank, and then request a higher credit limit. And so once you get comfortable with that, then request that they give you a card with less restrictions. That would be my step for that question. So hi, I am 13 and can I start investing in stocks? You sure can. You can speak with your parent, say, hey, can you open up a custodial brokerage account? Use those words, custodial brokerage account. I'll put it in the chat too. And so Vanguard has one, Fidelity has one. Those are my two favorite companies. And then you can sit with them and say, hey, I want, if you get an allowance or whatever it may be, say, hey, I want to invest this amount every month, and they can help you do that. So anyone can have an investment account, which is great. So, is there a certain amount you have to put for a Roth IRA? So, it's up to you how much you put. There is a limit for IRAs and 401ks. So, the limit for IRAs is $6,000 a year, and 401ks it's like $19,000 a year. But they're like, you don't have to invest a certain amount every month, which is great. You can start with as little as $15 or $5 if you want. So what I would do first, I would invest in the 401k. If you have one at your job, invest that to get your match if they offer it, and then go on to your Roth IRA and work on that. Because the thing with Roth IRAs, they also have like income limits. And so as you get older, you may be like aged out of contributing to a Roth IRA based on your salary. And so I like to hit that early just to take advantage of all of the options. Yes, so I love using Good Budget because it gives you like the different envelopes for all of your like goals. A lot of people love using You Need a Budget. It's an app, and so it does everything for you, which is cool, but it is paid, and I like to save my money, so I don't like anything paid. But if you want to like test it out, I think they have like a 70-day trial or something. But those are the two. So Good Budget, You Need a Budget. Mint is really good as well. Anything else? And it doesn't have to be, don't feel ashamed to send a question. So tips for saving. I like to automate my savings. And so, like I said, even when I was getting paid like $7 an hour in high school and stuff, I would just save probably about $20 to $25 a check into my savings account for things that I knew I wanted to do. So I knew prom was always coming. I knew that, birthdays and stuff like that, like I wanted to go and have fun, and I didn't want to have to depend on my mom to like help me. So automate it, like just set an amount and say, no matter what, I am going to put $20 or whatever your budget allows over per paycheck. And that just helps you get into the habit of not missing that money. Any book recommendations? And let me see here. So my favorite books, it's crazy. Like I'm a financial educator, but all of my favorite books are like just regular type things. So Damon John, he has a book called The Power of Broke, and I really love that money book. Clever Girl Finance, she has 2 books out. She just released a personal finance one as well as an investing book. So if they don't work a job, you can just open up a regular, so what it is, so a custodial brokerage account is just a regular investment account that the parent is over that you can invest in. And so that's just another option. But if they do have a job, you can just add into the Roth IRA as well. But they don't have to have a job for the custodial brokerage. And maybe I can just go ahead. I know we're at time, but and so you just set it up. They'll ask you the question and you'll just put the kid's name. And so once the kid becomes 18, they'll get control over the account. Are there any jobs for 13-year-olds? Yes, honey. So you can, of course, I did a lot of babysitting. That was my favorite thing to do. If you don't like other people's kids, I would seek out companies or like your local businesses that need help cleaning or something like that, and they can put you on a waiver and get you some coins. Or you can also just set up your own business. If you're artistic, you can go on Etsy, start selling all of your creations. It can be digital or it can be an actual product. But once you get closer to 15 or 16, you can actually go into like retail locations and they'll make an exception for you usually. So thank y'all so much. Definitely email me or DM me if you have any other questions. I appreciate y'all.